So we can imagine Morphovault of Ethena SUSDE looping that is operated, for example, by Gauntlet. We would rate that strategy. Imagine it yields, let's call it 10%. And then we would look into composition of the assets, the counterparty risk, and many other risks in our engine. And we would give it a rating. Let's call it between D and A. So it can be A minus, A plus, B plus. We are creating that for the retail users. So for all the listeners, so that when they go into Morpho, Euler, Camino, and any other lending market, they are looking not only on the yield, but they also get an information about risk associated. Because if one vault is going to yield, let's call it 12%, but it's going to be C plus, and the other one is going to yield 9%, but it's going to be A minus. We already interviewed some of the users. Many of them are going to go into A minus because they're afraid of losing money. And I really wish we had such a concept as Credora we're doing right now when Terra Luna had happened. Because UST fundamentally was broken. Like the model was flawed, and the rating from our methodology would give it like fairly low rating. I cannot tell you right now because we didn't do it, right? Because it's not existing right now. But I would assume it would be probably like something like C plus or maybe B minus, which would signal to the general user like, hey, it works for now, but there is a high chance it can blow up at one point.